Hey everybody, welcome to the Head Startup. On today's video I want to talk to you about a financial instrument called a turbo. So it has a few different names that it goes by. You might be familiar with a turbo warrant or a turbo certificate, but these are basically all of the same thing, and I'm going to explain in this video exactly what they are, how they work, and then I'm going to go through a tutorial on a trading platform called Degiro and show you basically how the turbos work on that platform and get you familiar with all the different terminology and everything and how the theory actually works in practice. So first off, what is a turbo? So a turbo is a leveraged financial instrument that helps you take advantage of small movements in things like stocks, FX and other commodities with a very low amount of capital invested. So here's just a quick example of how a leveraged financial instrument is different to just buying your normal. So for instance, if you wanted to make $100 profit on buying a Google stock, you'd have to probably buy at least one stock, which would cost you about $2,000 at the moment, and you're going to have to hope that the price in Google rises by 5%. So you have to put in quite a big investment to hope that you can make this $100 profit. But with a leveraged instrument like a turbo, you have to invest a very small amount of capital compared to investing in stocks to achieve the same amount of profits. But the downside of this is you have much more risk, and there's much a higher risk that you could also lose your initial amount that you have invested. So basically with leverage products, your gains are amplified and also your losses are accelerated. So they are just the principles of how leveraged financial instruments work. Now I'm going to talk to you in a bit more detail exactly how a turbo works. So turbo trading works through buying a transferable security that enables you to take a position on an underlying asset's price rising or falling. So there's turbos for all kinds of stocks. So you can buy a turbo for Palantir, a turbo for Tesla, for instance. And so the price of a turbo will change depending on how the price of the underlying asset rises or falls. So the most important thing you need to know in relation to turbos is the knockout level. And I want to explain this in a bit of detail now. So the knockout level will determine how much you actually pay for the turbo. It will determine the amount of leverage, and it will also determine the maximum amount that you can possibly lose on a turbo. So the knockout level is the point where you like to exit the market if it turns against you. So let's just have a look at this little graph here. I think it explains it best. So they have a made up stock here called IG. And so the IG price here is trending up and down. So it's roughly around $26,050. When you are buying a turbo on the stock IG, you want to set a knockout level. The knockout level will then determine how much it actually costs you to buy that turbo. So this investor here has set a knockout level of $25,850. So the cost of buying the turbo will be about $200, which is the difference between what the IG price is and the knockout level. So this investor is hoping that the IG price will continue to rise. So if the IG price keeps going up and up, say it goes up by $200, the investor will have made $200. So that will be 100% gain on their investment, because you've invested $200 to buy the turbo, and the price of IG goes up 200, then you have made 100% gain. So that's basically how the leveraging works. So you're investing a smaller amount so you can make much higher gains from your smaller amount. So what if the price goes the opposite way to what you have predicted and it starts to fall down to this level of 25,850? So the maximum amount you can lose is the $200 that you invested when buying the actual turbo. So as you can see, it's quite risky. You can easily lose all of your investment, but you could also end up doubling what you put in there quite easily as well. So that's the same with most leverage products. It's kind of high risk and there's high reward with them. So now I'll just quickly talk about, there's also options to go long and short. So the one I was talking about there was going long, which was hoping that the share price of that IG would increase. But you can also go short on a turbo and hope that the stock price will decrease. So in that case, you will set your knockout level actually above what the current share price is of the underlying stock. So you're hoping the stock price will decrease here. But then if it increases, then that's when you start losing your money. So now let's look at the pricing of turbos. So as I was saying earlier on, it's actually priced on the difference between what the underlying market price is and your selected knockout level. But it won't be exactly that, because a lot of these instruments are actually issued by banks. So they will actually build in their costs into the price of the turbo. So your initial costs that you pay for the turbo will actually already include the costs of financing it. Now let's look at this very good example that they have done here with a nice graph as well. So say if you wanted to trade an underlying asset called, say, DAX. The asset you chose is currently valued at $100 and you believe the price will rise. So you buy a long turbo. So you chose a knockout level of $90, which is $10 below whatever the current market price is. So that will be the price of your turbo. So as you can see here, the price of the turbo is $10 because the knockout level is 90 and underlying stock price is 100. So basically then, if the stock price goes from 100 up to 110, you've turned your €10 investment into €20. And if the stock price goes from 100 down to 90, your €10 will basically go to zero. So you're basically kind of gambling on the direction of the stock price. So the closer you actually set that knockout level price to the current price, the lower the price of your turbo will be, but also the higher the leverage. So it'll be more risky the closer you set it to the current price. The greater leverage means that any movement in the underlying price, up or down, will amplify your profits or loss. So they have a visualization on a graph here of what they were talking about in that example as well, which explains it very well. If you want to pause and have a look at that to understand it for a minute. So I hope I have explained basically how turbos work, okay, and that it was in plain enough English that everybody can understand. If you have any questions, obviously drop me a comment and I will try and address them. Now I'm going to move on in a second and show you a real life example on the trading platform Degiro and how to buy and sell different types of turbos on that platform. Okay, now so I've logged into Degiro and they have a web version and they also have an app that you can use. So if you want to find turbos on Degiro, you just need to go to the product section here on the left, and then you need to go to the warrants subsection there. And so then if you can search by, say, a popular stock, they have kind of turbos for most of the popular stocks. So the ones we'll have a look at here is for Palantir. So first off, I want to talk about what the naming convention is for turbos. So as you can see here, it says Turbo C. And there's also turbo P's that you'll come across. So a turbo C is a long version of a turbo. So in this instance, I'll be betting on the price of Palantir increasing. And if it was a turbo P, I'll be betting on the price of Palantir decreasing. So these turbos are open-ended. There's no expiration date. So they'll basically be there until either the price reaches the knockout level, or else the bank in the future sometime decides to remove them from the platform. So then the next part of the name is obviously the stock, the underlying stock there. So Palantir is the underlying stock for this turbo. And then you'll see a price. So this price on each of these turbos is actually the knockout level. So you'll see there is different types of turbos at different knockout level prices here. So as you can see, the ones I'm looking here, they're slightly increasing in the knockout level as I go down the list here. And as you can see also, as the knockout level is getting closer to the actual stock price of Palantir, which is around $27 at the moment, then the actual price of the turbo here on the right hand side is actually decreasing. As we were saying earlier on, the price is pretty much determined by how far away the knockout level is from the current share price. But also there's some cost included in the price as well, which I'll go through where you can see that as well in a moment. So it's actually very easy to go and buy one. So let's have a look at here. We'll just click into the top one here. So this one is at a knockout price of $14.14. So you have your usual pricing chart. As you can see, these turbos are quite volatile in price. They go up and down a lot. So you can make a lot of profits, and you can also lose your investment, as I was saying, very easily also. So if you want to buy a turbo, you just simply hit buy like a normal stock. And you can also just buy it through a limit order, or you can buy a market order as well. And all your usual kind of orders you can place on it the same as a usual stock, which is very handy. So as I was saying, if I actually bought this turbo, I would be hoping that the stock price of Palantir would continue to rise. It would cost me €12 to buy one of these turbos. And the stock price at the moment of Palantir is around $29. So if this price went to say $45, the price of this turbo then would increase to around $24. So you can buy multiple numbers of turbos here to increase your exposure then to the share price of Palantir. And basically, if you want to find a bit of detail on actually what's going on behind this instrument and all the details about the cost and who the financial institution are, should be a key information document for each turbo. You'll see that they have a document here that goes through everything. So I'll just download that. So here's a key information document for this turbo. So the issue here is actually a German bank, and they basically go through when it was first issued. And the important part here also is the financing spread, which is 3.5%. So that is the costs basically that are actually built into the price as well. So that is an important one to know about as well. So it goes through everything and give you explanation of basically how it works and how it's settled and everything. So that's an interesting one to read through. Make sure you do read through it and understand the instrument that you're buying before you ever actually buy one. So that's pretty much it for my explanation. And so remember, if you do decide to ever invest in a turbo, make sure and do all your research. This is not financial advice basically to go and do one. I just wanted to explain basically how they work so everybody can understand a bit more about them. So do your own research and make sure you know exactly what you're investing in. And it's probably best policy to only invest an amount of money that you wouldn't be afraid of losing in the first place, because there's a high chance that you could easily lose your initial investment by investing in turbos. So I hope you found this video enjoyable, and if you did, make sure to hit the like button and subscribe to my channel. Thanks.